Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Programmatic. How you doing, D? Is
Good morning, Will. How are you?
this Tuesday or Wednesday? I may have
I think
missed
it's
the day.
Wednesday.
It's Wednesday.
Yeah,
Wednesday. Happy Wednesday, everyone.
happy Wednesday. Um, yep, good morning, everyone. And before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice and help, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
I'm going to share my screen. And before we get started, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, you could type it into that live chat on YouTube. Will's watching it. He'll read it back to me to give you guys a couple minutes to put in your questions. We'll start out taking a look at the pre-market report, see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. All right, so pre-market report. These are stocks trading in the pre-market hours. Over here, we have this calendar view, allows you to go back into history to look back at a certain date, what happened in a pre-market hours on that date. So far, today we're on November 8th, and here we see there are 344 stocks that are trading higher in the pre-market hours, 291 stocks trading lower. As far as volume, we got 78.1 million shares trading higher versus 32.5 million shares trading lower. And if we convert those shares to dollar value, you got $1.3 billion worth of stock trading higher versus $390 million worth of stock trading lower. So far, from that perspective, looks like we're leaning towards the bullish side in the pre-market hours. So from that perspective, looks like that's indicating some bullish sentiment. Let's move down to these reports and see it from a couple different more perspectives. Then we'll go into the questions. So these are the most active stocks in the pre-market hours, the biggest percentage gainers and biggest percentage decliners in the pre-market. Sorry, this is in the pre-market, most active. There are 34 stocks that made our percentage gainers list, 50 on our percentage decliners list. So that makes it look more like we're leaning a little bit towards the bearish side of things in a pre-market. However, when we look at this list, we do see that there are small cap stocks in there, ETFs, leverage products. It could be an inverse ETF. It could be a preferred stock. So any security listed on a major U.S. exchange, if it's trading in the pre-market hours and meets our liquidity thresholds and minimum percentage move thresholds, it could make this list. And to narrow it down to a small group of stocks, we could use the filters here above. If you have a watch list, you could filter by your watch list. I'm going to use this one, an ETF, and drop it down. And you get different ETFs to select from. We have sector ETFs, broad-based ETFs. Over here, I'm going to choose this SPY, that's the S&P 500 ETF. And when you click on it, the list below gets filtered by stocks that are holdings in the SPY ETF. And hold on, let me refresh my screen here. I think I've been on there too long, so I'm stuck. And that will let us know what's going on in the S&P 500 stocks. So, sorry, it looks like my computer slowed down. Might be my internet.
No worries. We do have no questions have popped up, but Rob is waiting in the wings. So whenever you're ready, bring Rob in.
All right, S&P 500 stocks. So we see here 6 made our percentage gainers list, 9 on the decliners. again, it's a mixed bag. We're getting like mixed signals here from this perspective. It looks like a little bit more bearish to the bearish sentiment. But if you have a question, well, I'll take it.
Right. Let's we're gonna bring Rob over. Rob, remember to unmute yourself. You're coming on in. Thanks for coming, Rob.
Good morning, Will. Good morning, Dimitri.
Oh, good morning, Rob. Thanks
Morning,
for
Rob. Thanks for coming over.
Sure. Just before we get off the pre-market report, I know that you've shown us, and for the life of me, again, that's why I'd love to have a favorites list, because even though I use the Chameleon every day, it is, unless you're using the exact report over and over again, like every morning when you show us this, it's sometimes hard to find a subsequent one. And I was wondering, I know you've shown us before, but I cannot remember how you go to get this sort of report during the day so you can see how stocks are flowing, gainers and decliners during the day. If you could do that, that'd be, I think, great help to all of us.
Yeah, so similar report during trading hours. If you come up here under stocks, right, and then you see a pre-market, after hours, and then market movers. So the
Yes.
market movers are like regular trading hours. So
Okay.
on it, those would be the regular trading hours stocks.
Okay, good. And so that's essentially the same as the pre-market report, but it's during hours when we're actually trading.
Yeah, I mean, it has a little bit of a different view. It doesn't have like a history going back of, everything, but yeah, the list here, most actives, biggest percentage gainers, biggest percentage decliners, essentially, yeah, that's similar to what pre-market is.
Pre-market. Okay, that's great. That's great. I wanted to also tell you about a thing that happened to me yesterday, and I know you've talked about this before when you guys were floor traders, but I had I bought 4 puts on SPY yesterday, and they were kind of in the middle of the day, and I thought, it'd risen up and it'd fall back and I would close out, and I set an automatic closing price.
Yeah.
I never really thought about it later, and lo and behold, didn't hit my closing price, but it did go into the money. And so even though it was barely in the money, this morning I wake up with the damn thing was automatically exercised.
Yep.
And that's something that everybody needs to be aware of, even if you're the owner of you bought the put or you bought the call.
Right.
And I talked to TD this morning, the trading desk, and they said, yes, if it's one penny into the money, it will be automatically exercised. And so you can end up, as it showed this morning, I was short than 400 shares of SPY, which was an aggravating thing because I had to close some positions that were, for a loss to clear that out and clear that up, even though it was technically, when they exercised it, technically it was a moneymaker, but
Right. Yeah, that's one of the things with early exercise and assignments. You need to manage that risk because, like you said, sometimes you need to manage where you want to actually exercise something, and you put it, you would have to put in an exercise, exercising early. Actually, we're doing a webinar on this I think coming up Tuesday on interactive brokers.
Oh, that'd be great. One of the things they also said was you can put in a do not exercise on your long positions.
Yep.
But you need to call the trading desk to do that. You can't do it online, at least with TD Ameritrade.
Okay.
And I presume Schwab too. I don't know about Interactive. Maybe you can find out if they allow that there online, so you could. And they said also there's no way to do a blanket do not exercise.
Right.
So it was like, such a small little position initially turned out, 400 shares of SPY is a pretty good chunk of money.
Right,
So,
right, right. No, for sure. That's something that needs to be carefully, monitored.
yes. Well, I figured it would, if it went in, it would probably close out at the price I said, which wasn't that much above, just trying to make a few bucks, but it didn't hit my closing price, and I didn't think to look back and do it manually. So,
right.
lo and behold.
Or sometimes, let's say, because I think it's SPY trades till like 4:15, and actually, the stock itself will then trade after hours, the security.
Right.
I think the SPY options continue till 4:15. So even after 4:15, I think you could still get out of the option. If it was in the money, you probably could have just sold it even at parity. But sometimes what happens is that if you have an option like that in the money, let's say SPY, the option blows out and it's you can't get out. Like, let's say it's no bid at $5, right? So you can't get out of you can't sell it, right? There's no bid, zero bid. That means there's no price to sell it at. But let's say the stock is trading at 436.93. And I'm assuming you're long to 437 put.
Right.
So you have two options there. You can put in a do not exercise, say, you know what, I don't care about this option. I don't, it's too close to 437 and I don't want to come in short. So you could put in a do not exercise. But if I got these four contracts that will convert to short 400 shares, and the stock's trading 436.93, well, you could buy 400 shares at 436.93, and they're going to offset, right? Because what's going to happen is your puts are going to get assigned. So you sold 400 shares at 437, and you bought 400 shares at 436.93. They're going to offset. So you would leave out flat, and this way you don't give up that 7 cents that it's in the money, right? You could just buy the stock, and knowing, well, my options are going to get exercised because it's 7 cents in the money. So that's two ways to manage that risk if it's already, if you can't get out of the option itself, right? And it's like, sometimes this is referred to as pin risk, where the stock is so close to the strike that you're have a position on, you don't know what to do. Now, if you're long the option, it's a little bit easier, because if you're long the option, you kind of, you could say do not exercise, or just buy the equivalent amount of shares you need, or sell whatever your position is. If it's a call and it's above, then you'd want to sell the stock. But if you're short the option, that's where you're not sure, hey, am I going to get assigned or not? You want to try to see if you could get out of the short, because if you're short, let's say you were short the put, well, either there's two ways to hedge it, right? Well, to hedge it, you could sell the stock, right? So against your short put, or you'd have to close it out, right? You'd have to close it out if you don't want to, if you're not sure, if I sell the stock, but I don't get assigned, right, then I'm short stock is the problem.
Right.
And, so you're not sure if you're going to get assigned. So from the long side, you have a little bit more, you have more control over that. From the short side, it's a little bit scary. So I would say, like, from the short side, if you don't want that risk, that of knowing if you're going to get assigned or not, you probably want to pay close attention to, like, near the close, and see if you could trade out of that risk and just close out of it. As long as it's like a reasonable price, usually, I mean, in SPY it should be, and you just want to, close out of it. But the pin risk, it's a real, it's a real risk. There's once it's, and here's the other thing. Let's say you have that put and you're long the put, and let's say that it closed at 436.93, right? And that looks good. And let's say you bought the stock for 436.93. So now you're hedged, right? You're like, okay, I'm gonna short. I have this put, 4 puts that I know are gonna get assigned, and I'm long 400 shares of stock. And now let's say after hours, right? You got after hours. Let's see how it was trading after hours yesterday. And let's say after hours, you got, I think, what do they give you till 4:15 to exercise these things?
Right. He actually said on the trading desk that you could almost go an hour, but
An hour. Let's say up to 5 o'clock, right?
Yeah.
Well, let's say, next, that the stock is trading above. So it stayed below the whole time yesterday, but let's say it's trading at 437.25, right? Let's say that's the new right now. It's trading at $437.25. You bought 400 shares of stock and you have these puts. Well, at that point, the most efficient thing to do is sell your stock at 437.25 and do not exercise the put, right? Because if you exercise the put, it's equivalent to selling the stock at the strike price, 437. Right. But if you could sell your stock at $437.25, let's say you're already long that stock, well, you should sell that stock at $437.25 and just put in a do not exercise, right? You're like, I don't want to exercise that put at 437. That's it, and get rid of your stock at a higher price.
Or you could just buy the put back, or sell the put, just close the put.
Well, right? Let's say it's like,
but if it's after hours,
after hours, let's say it's 4:30, and the options that's it, they're closed.
Right.
Well, if you have up till 5 o'clock to put in your do not exercise, and it's 4:30, and you're like, okay, I can't sell the put out, but the stock's trading above that strike already, so it doesn't make sense for me to exercise this put, right? I could even if I wanted to sell the stock, I could sell it short at a higher price at this point, 437.25. So at that point, you at 4:30, I can't trade the put, but I can submit a do not exercise, knowing that the stock's already above the strike, right? So those are the things, and this is the risk to the person short, because they don't know what the other side will do around that, right? They don't know if they get a sign anymore or not, because all of a sudden the stock after hours is trading, around the strike. And so that's the pin risk. It's an interest, because when you trade for a long time, you're going to start encountering these problems, and then you will learn how to manage it, the right way. But it's good that you're bringing it up, because people who haven't seen this situation, it's good to talk about and prepare for it.
Yeah, this is the second time I've had something like this happen. I had it happen on FedEx about 2 years ago, and I was again had I believe I had a call on FedEx, and so I ended up owning about 500 shares of FedEx, and it was
and the owners of the if you're the owner of the put, right? Think of it this way: in your situation, you're the owner of the put, and let's say at 4:10, 4:15, the stock's trading right below 437.
Right.
So let's say you did buy that stock and you're hedged, right? Let's say you bought it even at 436.97. You bought 400 shares, and you know your 4 puts are gonna offset that, right? So now you're hedged. But think of it this way: you have a free call option at that point. You have a free call option up till 5 o'clock. So what I mean by that is that if nothing happens, that's it. They offset, right? The put, but let's say the stock goes up $2, right, after hours. Well, if the stock is up, let's say $2 after hours, well, now all of a sudden you bought the stock, you could sell it and just do not exercise your put. So what happens is you have this extended free call option, because you got to make sure that your broker allows you to put in that do not exercise. You have to know the cutoff time, right? Because if they say
I think he said you could do it almost up to an hour, but the sooner the better, and preferably before the end of the trading day.
Right. Well, you want to.
Unfortunately for me, I was not fully hedged on that, so
right.
I ended up having to buy the darn
right.
the stock back.
If you're hedged, right? If you're hedged, you get this. Think of it as a free call option. Right?
Yeah.
Now you can sit there and say, hey, if some kind of news comes out or whatever. Now, obviously, if the stock goes down, then there's no, it doesn't. You already hedged it, right? You already bought the stock, and you got the puts enough. It offsets.
Right.
But if it does go up, you got that free call option for that time period that the stock could be trading after hours when the options are closed, and the time they give you to submit your do not exercise. So let's say your cutoff time is 5 p.m., right? And the options close at 4:15. Well, in this scenario, between 4:15 and 5 o'clock, the stock could move above the strike, maybe even significantly. And if you sell your stock back out, you put it do not exercise. So for like about 45-minute period, you got this free call option if something happens. And let's say, all of a sudden, I don't know, whatever. So, maybe Apple comes out and says, oh, we're raising our guidance, or the Fed says something, we're going to, lower interest rate. Stocks can move after hours, and sometimes significantly. So maybe, SPY might $2 would be a lot, to make it move, but there are stocks out there that can potentially moves.
Tesla, for instance.
Yeah, exactly. Tesla could be volatile after hours. So that's one, when you're managing your risk, you should just know all this, and the most efficient way to manage it, right? If you have till 5 o'clock, you could sit there, just watch and say, hey, you know what, my position's offset, but I should monitor this, because if between now and 5 o'clock the stock moves, I could get out of my stock and do not exercise the put. And reverse in a call, let's say you have a call you shorted, so you short the stock against your call if the call's in the money. But if the stock gaps down, you're like, oh, wait a minute, I don't want the call anymore, right? I'm just going to buy back my stock, but I don't want that call because stock's lower, right? So if you have a call at 4:30, let's say 4:37, let's say the stock closed at 4:37.29, you have a call for 4:37, you're going to get, that's going to get assigned to you. You're going to be long stock. Well, if after hours the stock's trading at 4:36, well, you don't want that call, right? You're better off just buying the stock at 4:36. Why do you want to pay 4:37?
Right.
Do not exercise. So you have that, time period that they give you to submit the do not exercise. It's like it could potentially be like a free, free call or free put, depending how how you're hedged. So yes, part of risk managing is knowing, the process, especially with your broker, of assignments, early exercises, when you could submit this stuff, because you'd be surprised if you're trading a lot. It's gonna happen where you're like, oh wait, I should submit this. This is gonna save me, hundreds, maybe thousands of dollars, which is
Right.
hard to make, right? So yeah, it comes up.
It does. It does. And I think it's correct to say that in trading American options, even though we don't see exercise prior to the expiration date normally,
Yeah.
they can be exercised prior, right?
Yeah, exactly. There are times where you want to exercise your options prior to expiration. That's what we're going to be doing the webinar,
Okay.
because it's economically beneficial to do that. And that's what we're going to go over. Like, when do you have this option that's American exercise, and because it's American exercise, you actually, you're paying, for an American exercise option. And there are certain periods where you have to do an evaluation. Is it economically beneficial for me to exercise the option now, even though expiration, is, still X days away? That's what we're going to go over. It's important because.
Do we have a link for that? Has Will sent a link for that? Oh, there it is.
I just
Yeah.
thanks, Rob. I just dropped it in the YouTube chat. Everyone remember, it is a
I see it.
IBKR webinar. So any of those webinars, you have to go and register yourself. And if you can't attend it live, they'll send you a link. I'll actually put another link in. All the webinars we've done are sit on IBKR's library. So I'll send a link for that as well.
Yeah.
Yeah. So that's no, thank you for bringing it up. And coincidentally, that's what we're going to be talking about Tuesday, the early exercises. But it's very important, to know this stuff. You want to trade as efficient as possible, because if you don't, it's just gonna that will be hard to make up over the long term if you're not, right? If you're not trading efficiently, and we'll talk about that more this Tuesday with IBKR. I'll show some actual examples.
Excellent.
Well, we're right up against the opening bell. I don't know, Rob, if we got to your major question. I know.
No, thank you. That was this discussion was great. I mean, I always learned so much listening to Dimitri.
All right, well, come on over tomorrow if there was more that you wanted to ask.
All right.
Always open for questions. It makes a way better show. So thank
Okay.
you, Rob.
All right,
you
thanks,
bet.
Rob. Yep. All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day, and we hope